All right, guys. Hey, this is Jeff with Fish Creek Capital. Again, we're live, the Lunchtime Profits. It is around lunchtime today, around noon. It is Wednesday, November 12th. And again, just wanting to practice talking to a camera and giving you information that's hopefully helpful, and just along the way, learn more about Fish Creek Capital and what we do here from an investment standpoint and how we build custom portfolios to help people with their investments. We love dividend growth and creating cash flow through dividend growth portfolios focused on individual companies, looking at them as owners. And today, I want to end with two books that have been foundational for this strategy and that have helped me tremendously in my investing journey and in building portfolios for Fish Creek Capital clients and investors. But first, let's start with a couple of interesting news items today. So today is the last day for penny production at the U.S. Mint. Heard that on Bloomberg this morning. It ends 233 years of penny printing. The Trump administration is the one that's behind stopping the penny printing. That just ignore those sounds there. Again, this is live and unedited. So the government, Trump administration, is stopping the penny and is behind this initiative, and it's due to rising cost. Each penny cost about 3.7 cents to produce and distribute. So today will be the last day of penny production with the U.S. Mint. Also, other big news item is just the government shutdown. Looks like it's likely to be over. So the Senate did approve a spending proposal that would end the government shutdown, the longest government shutdown in U.S. history. It's 43 days long. So the House, now that proposal is headed to the House. Some votes will start early this afternoon. I think they reconvene early afternoon, 1 o'clock Eastern time. So maybe even now I'm on Central time and it's noon here. But the official vote will be around 7 p.m. Eastern time today. At least that's what it's scheduled for. So 43-day shutdown, longest in U.S. history. It's to also note that Obamacare or the healthcare subsidies are still not included in this proposal. And I looked up and actually heard on Bloomberg also, and then looked it up with Grok. Obamacare actually represents 7% of the total population of the United States. So that's a lot lower than I thought. And so maybe it's not that impactful. I'll also note that Obamacare was a Democrat program, and those subsidies for healthcare, that was a Democrat thing. And it was also that they're supposed to end, they're scheduled to end at the end of 2025. And that was also a Democrat thing. So it's not really the Republicans or Trump creating these deadlines or these, subsidies expiring. That was already in place by the Democrats. So that was something else, because you hear so much around, this is Trump and he's playing golf and ignoring the Democrats. Well, really, it's the Democrats. These were original dates for the program that they created. So there you go on Obamacare and the healthcare subsidies. So from the market perspective, midday, yesterday we saw a lot of rotation into defensives and cyclicals, like the Dow was up. We're still getting that today. The Dow is up close to 400 points. The NASDAQ was down, but I believe it's back flat again. Let's see, because it has been coming back. Mid-morning, it kind of started turning around. So let's see the official real time. NASDAQ is still down. The Dow is up 0.82%, and then the NASDAQ is down 0.29%. So that's what's going on. The futures, the NASDAQ futures have turned midday, but United Healthcare is up a lot. The banks are doing well today. Goldman Sachs, JP Morgan are seeing more of a defensive move, which is why we like even the dividend growth, because it really focuses on companies that are actually earning money, that are creating cash flow, that are distributing that back to shareholders. It's underperformed this year, frankly, because of a lot of the AI stocks and the NASDAQ doing so well. But you'll see those drop the fastest also. And you really can't, build your portfolio around companies that aren't producing earnings. So that's very dangerous. And, having the predictability of cash flow, dividends, especially growing dividends, which we'll show that more during times like this, it's just there's just so much more, security around that and peace around that, just because you kind of know what to expect and know what's happening, and you've got a plan that has proven to work over time and is consistent. So that's great. So the two books that have really helped with that, the first one is the single best investment, Lau Miller. I think I've got that right. Definitely get this book, read it if you're interested at all in dividends and dividends growth. There's actually an affiliate link in the description to this video that will take you straight to Amazon to buy this book. And then Lau Miller, he actually taught, or David Bahnsen learned from Lau Miller, and he talks about that. You'll hear David Bahnsen talk about that. He has his book called The Case for Dividend Growth. Real easy to read. It's shorter than the Lau Miller book, but very impactful, and was super influential in the strategy that we use here at Fish Creek Capital. There's also a link, an affiliate link for this book in the description as well below. So check these two books out. You've got to read them if you want to learn about dividend growth. And if you got any questions, feel free to ask me about those. We'll stop here today. Please like and follow Fish Creek Capital, and hope you have a great afternoon, and we'll see you tomorrow.